What is up, you guys? Today we're going to be talking about investing in Chinese companies. There are a lot of great companies like Alibaba and JD that are really down about 50 to 60% from their most recent highs. And a lot of people have been asking me, do I plan to buy these companies? Why would I or why wouldn't I be buying these companies? And I figured that I would just do a video for you guys. So that's what we're going to be talking about today. If you guys don't know who I am, my name is Peter DiCarlo. I run a company called Capitalist Academy. We're about to do over $300,000 in revenue this year. And this channel is my way to give back to you guys, to basically share everything I've learned in my 7 years of entrepreneurship. I also run a full, trading stock market YouTube channel called Traders Helping Traders. The link is below, but this is all about, business building, real estate investing, long-term investing, sales, etc. And so welcome to the channel, guys. Go ahead and hit the like button, subscribe, hit the notification bell because it's very important to watch these videos as soon as they come out for the YouTube algorithm and just to help you guys learn. And also go ahead and check out our free Discord server. It's going to be linked down below. I go live with them each week, every single Friday. It's just a great server for somebody who's a long-term investor, stock investor, real estate investor, and just a great community to be a part of. So go ahead and use that link down below. Now, let's take a look at the notes that I have written down to kind of go over the pros and the cons of investing in these companies. And you can see the pros are very low. So why you should be investing in Chinese companies. The only pro at this moment is that they are very attractive. And while that is the only pro right now, it is a very good reason for you to potentially be looking at some of these companies. You look at some things that, like Baba, down 52%. Alibaba's down 52%. The PE is very attractive right now. JD down 32% from all-time highs or most recent highs within the past year. Didi down 54% from most recent highs when it IPO'd. NEO down 48% from highs. TAL down 95% from highs. I would not invest in that, but we'll talk about that later on. So a lot of these companies are down massively, and companies that if you would have told me 5-6 years ago, like Alibaba has dropped 52% in a year, I would be like, oh, I would definitely be buying that company. But a lot of things have changed since 2015, 2016, when I first was buying these companies long term, and not for the good, right? Things have not changed for the better. So I also put here, watch out for other companies that are based in the United States but have a bulk of their revenue in China. A good example is Wynn Resorts. So on this channel, I'm going to be also putting out a video this week or next week talking about the 3 stocks or 3 companies that I believe are undervalued on a long-term basis, and Wynn Resorts is one of those. However, while Wynn Resorts does have a lot of their properties in the United States, their biggest property is in China, in Macau. And a company like Wynn Resorts is down 42%, even though it is a United States company. So you also have to watch out for those things, because when we talk about the cons, which there's a good bit of them, in a couple of minutes, you have to realize that if a company relies a lot of its revenue on maybe like China suppliers, Chinese companies, Chinese consumers, potentially even, like Wynn Resorts, where a big piece of their property or a factory is in China, that can also end up hurting that company as well. So things are very attractive from a, financial standpoint. A lot of these companies are looking very attractive, and their PEs are looking very attractive. And that's a big pro. And that's why I'm making this video and even looking into them, because a lot of people are like, dude, Baba's down 52%. Now, let's talk about the cons, and there's quite a few cons when we're talking about why I would not be investing in these companies. So right now, I put potential U.S. regulations against Chinese companies in the United States stock market. We've been hearing about it for a while, but there is the potential that the United States stock market would no longer, or the U.S. government, I should say, would no longer allow Chinese companies to be listed on the New York Stock Exchange, because there are a lot of issues with it. If you look at like an example, which is funny, I actually just got a payout from this because the SEC sued them, as well as a bunch of other stuff. But a company like Luckin Coffee, 6 years ago, really 5 years ago, Luckin Coffee was a very big up and coming company. They're basically like the Chinese Starbucks. And as a United States citizen, I was allowed to invest in them as, a US stock trader. And there was a lot of fraud happening. There were major issues happening with the company, and it dropped nearly 95% within a day or two, and it has never recovered. And so there are a lot of things that Chinese companies can lie about, that the Chinese, well, not, I shouldn't say Chinese companies, but the Chinese government can lie about. And there's a lot of issues with investing in those Chinese companies. And then there's the big issue, like I said before, the fact that U.S. regulations could end up taking these companies off of the United States stock market, and then you would have a hard time getting rid of those companies in your portfolio and take a major hit as well, whether that goes into like an OTC or something along the lines of that. Now, the second thing is the U.S. relationship with China. With Joe Biden being president, it seems that there's not as much aggression towards things like intellectual property, tariffs, trade, any of that like there was under Donald Trump, which if you think that potentially if Trump was reelected for a second term and then he continued to put more and more tariffs in place, continued to fight towards a better trade agreement, that our relationship with China could get worse. And I'm not trying to make any of this video political, whether you don't like China, don't like Chinese Communist Party, don't like Joe Biden, don't like Trump, whatever it is, but the relationship between the United States and China is something that's going to be very important, not only as a citizen of the United States, but also as an investor in the U.S. stock market looking over the next 5, 10, 15, 20 years. So there's a lot of issues when it comes to that. Then my real reason, which is what I'm really worried about, not so much the first two, but what I'm really worried about is CCP potential risk. If you guys don't know what CCP is, it's the Chinese Communist Party. China, for those of you who don't know, is a communist country. They do not have a democracy like we have. There is no electing officials into government. There is essentially, I don't want to use the D word, like dictatorship, but essentially whatever the Chinese government says, you do. You're not allowed to not do it, or, bad things happen to you. So I put here the first bullet point, their reign over companies such as TAL and Baba, Jack Ma going missing over speaking out against the CCP. So if you guys remember about 7-8 months ago, Jack Ma, who is the probably top rich, not for sure, this is me throwing numbers around, but probably top 10, 20 richest people in China. And if you look at China in general, China is not a country, because it's a communist country, like the United States, where they have billionaires running all over the place, right? We have major figureheads, mega spearheads in companies and different things, like, I talk about later on, but like people like Elon Musk, Bill Gates, Jeff Bezos, those people who in America have a lot of pull. There are a lot of rich people in America. That's not really how it is over in China. There's not, a ton of Jack Ma's running around. And so he spoke out against the Chinese Communist Party about 6-7 months ago. And if you go and watch those videos on what he even said, it wasn't even crazy. It wasn't nuts. Like, if, for instance, if Jeff Bezos came out and he was like, I don't agree with Donald Trump. I think Donald Trump's a terrible president and I don't ever want to see him reelected. I don't ever want to see him in power ever again. He could do that all he wants. He would not go missing. And Jack Ma didn't even say anything quite like that. Not anywhere near as bad. But Jack Ma went missing right after he said that. Boom, wasn't seen again. And then maybe a month later, he came back and was said essentially that, he went on a hiatus. But they have pull over these different companies. They can tell these companies whatever the hell they want to do. For in the instance of TAL, like I was saying over here in this third bullet point, I was invested in a company called TAL, and there was a company called EDU. If you guys have seen, basically they're online education software companies. Basically kind of think of like, what are some of those companies over here? I can't think. Like Sylvan Learning is one of those types of companies, but there are a lot of other companies out there that a lot of people are investing in during the Rona. But basically it's an online, education software company. And they decided that, they were going to potentially make all online education companies in China nonprofits. And the stocks dropped, like TAL dropped 45%, 50% in a day. It's currently down 95% from its, most recent highs. And they can do that. They can do whatever in the hell they want because it's a communist country. They could just say that we are going to no longer allow any e-commerce sites within China, and then Alibaba would go completely out of business. They can do whatever in the hell they want. And one of the biggest things you'll notice in not only communist countries, but, the CCP in China is they do not like people or companies outshining or becoming too powerful for their government. So for instance, like I put here, the US couldn't stop Elon Musk or Jeff Bezos or Warren Buffett or, any of these people. They could come out and bash Trump all they want, bash Biden all they want, bash, Governor Newsom about these COVID regulations. Like they can do whatever they want. They're not going to go missing, right? Because at a point, some of these people like Elon and Jeff are actually bigger than what the politicians can do. I wouldn't necessarily they're bigger than the United States, but they are in a league of their own. But communist countries don't allow a corporation to get that big. They don't allow a person or a figurehead to get that big because they can constantly control that whenever they want. So that's a huge downside. So looking at those three cons, in summary, I would not be investing in Chinese stocks right now unless it was a very, very, very small part of my portfolio and it's only a Chinese A plus company. So for me, an A plus company would be like an Alibaba, a JD, potentially a Neo. If Neo dropped to like $15 or $20, I would probably buy Neo. And just, as far as Neo is considered, while it would be risky, it's just because the massive potential upside of what Neo could eventually become in the next 5 to 10 years. But I would not be buying any of those other companies. I would keep it to like A plus companies like a Baba or a JD, and then maybe a Neo. And even at that, I would only be investing a very small amount of money that I would be willing to completely lose just because of the massive potential risk. When you have massive potential reward, like very attractive prices with how much, these companies have suffered over the past year and a half, you also have a massive amount of risk. So I hope this video helps, guys. Let me know what you think. Hit the like button, subscribe. I'll see you next time. Peace.